Hi and welcome to Penser Bank and our analyst presentation of Beijer Group. My name is Markus Almerud and I'm an analyst here at the bank. Beijer Group is a leading manufacturer of industrial routers and switches, as well as panels for demanding and harsh environments. We would like to touch on 3 points today which illustrate the investment case. Firstly, the market exposure. Secondly, the strong demand for Beijer's products. And thirdly, that the share is back to historical lows despite its super strong momentum. Starting with the market exposure. Beijer is exposed to several mega trends. Roughly a third of sales are to rail and track, which benefits from the environmental movement. Here we see customers such as Alstom Bombardier, ABB and Stadler. Energy accounts for 15% of sales. This is mainly sales to electrical substations, and as the grids are upgraded and as the amount of micro producers of electricity increase, the substations needs to be upgraded. This is where we see the fastest growth in the coming years. Finally, manufacturing, about 20% of sales, will benefit from the electrification, digitalization of the manufacturing industry for Industry 4.0. Now, Industry 4.0 is happening as we speak. The favorable exposure has led to a significant increase in demand. The company has reached all-time high order intake for 4 quarters in a row and have reached a new level over and over. Meanwhile, we are seeing delays in shipping on the back of component shortages, and annualized book-to-bill is at an unprecedented 1.3 times. Now, as the order book is shipped, we will see margins expand. So during the pandemic, the cost base was cut and operating costs are now at a stable level, meaning that the operational leverage will be quite dramatic. All in all, we expect earnings CAGR in the low teens for the coming 4 to 5 years, and there's no doubt in our minds that the margin leverage will come. It's just a question of time. Anecdotes are witnessing about component shortages easing, so we think this will happen sooner rather than later. Finally, the share has suffered significantly during the market turmoil. Valuation is at decade low levels, despite the strong momentum, making this an excellent entry point in the share. Rarely do we see combination of operationally aligned stars and historically low valuation levels. Now we do. So in summary, we see excellent end market exposure, brutally strong order intake, which will lead to expanding margins and strong earnings momentum, and all at a very attractive price. Thank you.